So what do private lenders typically do to generate loan docs?
So private lenders in the market are oftentimes kind of approaching loan documents from a variety of different backgrounds. And it kind of depends on where the principals came from. So if they came from, for example, a conventional mortgage shop, they're probably used to using a piece of software to generate documents. But if they came from more of a mortgage brokering background, they often just think of loan documents as a set of forms. And when you think about it as a set of forms, you say, well, let me just take some Word documents and I'll put maybe merge fields on there, and then I can, send out docs and create them really easily. But that's really dangerous to do in our space, particularly because one, there really aren't anything as form documents. It doesn't really exist because each state is very specific in nature, and it's really fact intensive. And so I always tell people is no matter what you do, you need to make sure that the documents correspond to the facts of your loan. And so typically the way to do that is one of two things: hire a law firm because they have a malpractice problem if they don't make sure that they write a loan exactly to the parameters of your facts. Or alternatively, you need a piece of software that is constantly being updated in the background to adapt to the facts, and also a piece of software that understands a logic basis that is fact specific. Because it matters, is your borrower an entity? Is it an individual? Those little nuances and facts really should change your loan documents extensively, and if they're not, something's wrong. And so you really do want to make sure that when you are creating loan documents, and if you're a lender, they really have to be thoughtful about how well written are these documents to the actual underlying transaction.
But what if I'm a lender and I only lend in one state and I pretty much do the same loans over and over again, and I don't have a variety of different loan types I'm doing?
100%. And I think that's a really good example, is that facts are so nuanced. So I just gave you one previously about what if your borrower is an individual or an entity, right? Well, let's just take that out for a second and say, well, it's just borrowers. Well, how many signers are there to the transaction? Are those signers now also your guarantors? And should they have joint and several liability in the guarantee? What about their spouses? Should they be parties to the guarantee? All of these little facts matter. It reminds me so much of my legal training initially as a lawyer, where you're really digging in and you're asking a lot of questions of your client and saying, well, tell me about this. And oh, you gave me a new piece of information. And I have to go down a decision tree and say, am I protecting you adequately now because of these new facts being inserted in your scenario? So even though it may feel like the transactions look a lot alike, in reality, they're really different if you're doing your job correctly.
But are there some lenders out there that just have a set of docs that, let's say they got them a long time ago from wherever, some attorney, they're just using that over and over again? Do you find that they're doing that in-house, or do they hire a loan docs company to prepare them?
Yeah, and we see kind of both approaches, right? We see a lot of clients who will, on the law firm side of the business, we'll see clients that oftentimes end up writing their own, or not writing their own, they'll go to a law firm and say, hey, I'm going to be in the state of Nevada. Can you get me a set of documents for the state of Nevada? And they'll take that and oftentimes templatize it in their own system. They can oftentimes populate the documents directly in their own system by taking the content, the borrower name, loan amount, all that kind of stuff, and then populating the documents, which is fine, right? I mean, it's an okay way to run business, but it's the same reason why people hire law firms in the first place when they're entering into big transactions. And it's always a funny fact to me because I'm thinking about this from a money perspective. Where else in life do you enter into multiple $100,000 contracts as a minimum amount, right? And don't consult an attorney. Just imagine doing this in your personal life, right? You would, of course, hire an attorney. It's a big decision. But because we are in the business of loans, we are oftentimes desensitized to what we're really doing in the background, which is writing huge, enormously valuable contracts. That's what we're really in the business of. And you would definitely protect yourself in a normal business context, but now that it's a loan, people say, oh, well, just give me a note and deed of trust. And it's like, whoa, let's just recognize for a second, this is a $500,000 transaction. Do you really know you're protected in this $500,000 transaction, or do you just think you are because you hired a law firm at some point in time to do this?
But don't you see some California DRE licensed lenders that say, hey, I'm licensed by the DRE, I know my stuff, I can do this stuff on my own? Do you find a lot of them will just say, hey, I'm going to do my own docs, I don't need an attorney?
Yeah, absolutely. And so what you'll find is people who I think, and it kind of goes back into, what are you good at? I'm in the doc business, right? My entire profession has been in the preparation of loan documents. I am not useful in any context outside of that. I cannot patch drywall. I cannot do anything of utility. But my legal training is in understanding weird nuances related to loan documents. I can give you a deep analysis about governing law, and should you govern the promissory note by California law when you're in California, or should you choose Delaware law because that's where you're based out of? And I can give you the pros and cons. I can give you cases behind that about why that is structured. So apply that. That's one section of the note, right? You'll get a question of what should my default interest rate is. I could give you I could write an essay on this, and I could give you a 1-hour class on default interest alone and all the considerations behind it, right? So when you think about a set of loan documents, it's a giant complex contract that every single section should be analyzed methodically in this way. And there should be a strategy behind why did we choose this, because there's alternative paths you could have entered into. And so to think of loan documents as stone tablets that are set in place that do not change is really a weird way to think about it, because each loan is inherently a little bit different. And so it's kind of an odd way to think about the legal side of what you're doing.